You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Wednesday, 18th day of September, 2019. Thanks so much for tuning in, whoever you are, wherever you are. We're just glad to have you right here, right now. I'm going to put up a chart of the S&P 500 Emini Futures. And if you cannot see the chart, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in 30 seconds, and that'll give you one-click access to the show each and every day. Now, on the days you're out of the office, can't get to the desktop, just grab any internet-connected browser and point it to youtube.com/CFRN/live, and there you will find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. All right, this chart here, I just want to point something out real quick. I meant to do it yesterday, but it didn't, so I didn't do it Tuesday. Didn't do it Monday, didn't do it Tuesday. Hey, Better late than never. This is just an interesting side note. It's just one of those things that make you say, all right. This is Friday right here. September 13th, Friday the 13th. Okay. Now, these little dotted lines, you all know, are the weekly trading zones. These are weekly zones from last week. Let me make sure they are last week, and I haven't moved them around. Yep. And yeah, okay. So, as we move into the close last Friday, price finds its way into a weekly trading zone, 3009/3010. And these are 30-minute candles, so you can see we spent an hour, 2 hours, basically inside of a weekly trading zone as the market rolls into a close on a Friday afternoon. Now, that in and of itself is not that unusual. If you go back through historical charts and grab your little notepad or wherever you keep your weekly trading zones, it's not unusual at all for price to close at or in a weekly trading zone at the end of the week. What I found interesting, we all know that we had a pretty good size gap lower open on all of the indices Sunday night when Globex opened, and this is where we opened. We closed inside of a weekly trading zone, and then we opened this week inside of the weekly trading zone below. Now, from 29.97 to 3009, that's 12 points. So we had basically a 12-point gap lower open on the S&P. But I just found it interesting that we spend 2 hours inside of a zone, and then that's Friday afternoon, and then Sunday evening, 6 p.m. Eastern, when we reopen, we just leapfrog over that whole area, and we open inside of the weekly zone right there. See that? 1, 2, 3. So we spent 3 hours and something, or those are 30-minute candles, hour and a half. And then of course we headed lower, but as I said, it's just one of those things that make you say Now, if that made you say let me throw a little something else on top of it. Weren't these zones created for the September contract? The answer is yes. Yeah, these zones were created for the September contract, ESU 19. So then how can it be that when we rolled over at midnight Thursday night to the Z contract, see, if this were happening on the U contract, that would probably just go, oh, well, zone to zone. But this is the December contract. And everybody said, whoa, how'd that happen? Well, here's the deal. No matter what time frame you're in, no matter what market you're looking at, no matter what, the clock on the wall is always price. Even though we did roll forward late Thursday night, early Friday morning to the December contract, and the pricing is different. If you look at the U contract and the Z contract, there's a difference. There was certainly a difference in those prices on Friday. But yet, I know. If you figure it out, you let me know. We've been seeing this kind of behavior and this kind of behavior, opening at a zone, closing at a zone. That's been going on for years. But maybe you see it, maybe you don't. I think you do. All right. Let's not tarry. Let me give you the numbers from around the world real quick so Michael can come in and give us a recap of what happened in the live training room today. You know what? We've got this Fed meeting coming today. I should probably share this because it's pretty important. And I'm just going to read this straight to you, no editing. It's been a turbulent week in the overnight funding markets where short-term rates spiked to a level as high as 10% Monday and Tuesday before the Fed calmed it down. The Fed was forced to do two open market operations to tame the rate move, but its own Fed funds target rate, in an unusual move, rose to 2.3% above the Fed funds target rate range it set on July 31st. Market pros said the problem came from a cash crunch, not a credit crisis. It's kind of like you got some plastic in your wallet, but you have no folding money in your front pocket. Not a cash crunch, or it was a cash crunch, not a credit crisis. Fed Chairman Jerome Powell will have to speak about this today when he takes the podium to do his Q&A session after the rate announcement. As the Fed was meeting to consider cutting interest rates, it lost control of the very benchmark rate that it manages. It's been a rough week in the overnight funding market. Interest rates temporarily spiked to as high as 10%. I said that, 10%. For some transactions Monday and Tuesday. The odd spike in rates forced the Fed to jump in with money market operations aimed at reining them in, and after the second operation Wednesday morning, it seems to have calmed the market. Now, Fed Chairman Jerome Powell is expected to face questions on the issue when he briefs the press after the central bank's 2 p.m. Eastern rate decision today. This just doesn't look good. This is a director of rates over at Wells Fargo. He says, this just doesn't look good. You set your target. You're the all-powerful Fed, man behind the curtain. You're supposed to control it, and you can't even control it on Fed Day. It looks bad. This has been a tough run for Powell. Shoemaker and other strategists said the Fed's two operations, Tuesday and Wednesday, seem to have calmed the market for now, but the question is, why did the wild swing in rates happen in the first place? Strategists say it seems to be the result of a cash crunch, not for now the makings of a credit crisis. But the concern is, if it persists, it could give the appearance of an underlying problem in the financial system. Strategists pin the problems on a number of factors, including the Fed's reduction in its own balance sheet, which removes some liquidity from the market. On Monday, there seems to have been a perfect storm in the market, causing a cash shortage. Corporations were seeking dollars for quarterly tax payments, and the Treasury had also issued a large amount of bills, which reduces liquidity. There was also speculation that the attack on Saudi Aramco, which took half of its production offline, may have spurred demand as oil spiked and investors feared a Middle East conflict. The Fed on Tuesday accepted $75 billion, that's B as in billion, in bids submitted in its overnight repo operation, after accepting $5.3 billion on Monday. The repo rate was quoted at 2.25 to 2.6% after Tuesday's operation, from a range that was up to above it at 3%. The rate on Tuesday temporarily hit a high 9%. Now, keep that on your mental clipboard while I give you this. In a tweet on September 18th, that would be today, Arthur Hayes, CEO of derivatives giant BitMEX, forecast that this fresh quantitative easing would further decrease faith in fiat currency. The comments come a day after the Fed swooped to decrease interest rates on some loans, which reached more than 10%, or 4 times its target. More than $53 billion was pumped into the economy while you and I slept. QE forever, that's cute. They're not calling it QE4, they're calling it QE forever, is coming. Once the Fed gets religion again, get ready for Bitcoin 20,000. The Fed's QE injection marked its first emergency intervention since the end of the 2008 financial crisis, an event directly leading to Bitcoin's creation. While the cryptocurrency has yet to see a global crisis on the same scale, markets have shown that Bitcoin price benefits from political and economic uncertainty. Now, not just the Fed. Meanwhile, also the European Central Bank is following the QE trend once more this year. Completing its latest move last week, commentators believe markets want the ECB to continue the same behavior, giving rise to the QE forever phenomenon described by Hayes. Earlier this month, Hayes already said Bitcoin would hit its all-time high of 20,000. BitMEX is still grappling with unwanted attention from U.S. regulators who suspect that Americans are bypassing BitMEX geo-blocking and accessing the platform anyway just to get their hands on some Bitcoin. Well, there you have it. Quite a little bit of news. Something big is afoot. And we're going to find out. We may not find out the truth, but we'll find out whatever reason they choose to give us. And we may learn an awful lot during this Fed announcement today, during the Q&A session. Currently, here in the U.S., cash index, the Dow down 63 points, NASDAQ down 30, S&P 500 down 8, and the Russell 2000 down 12. In the commodity basket, crude oil down 91 cents, trading 58.43 last. It's a drop of 1.5%. Gold up $2.90, trading 15.16.30 last. At the close, the Asian markets, Nikkei posted a loss of 40 points. Shanghai gained 7, and the Hang Seng dropped 36. And in European markets at the close, the FTSE was down 6, the DAX up 17, the CAC up 5. No movers, no shakers anywhere around the globe. We did have a mixed day in Asia, a mixed day in the UK. So far, it's a big red radio Fed day here in the US of A. Let's go to Michael, get a recap of what happened in the live training room this morning. And then I'll be back. We'll look at the Concierge Trade Alerts, logic, talk to John, all that and answers to your questions. Take it away, Michael.
Okay, I will take it away. Hold one moment. Here we go. Yeah, big Fed Funds Day today.
All right, sir. You have it. It's all yours.
Okay, excellent. Thank you. Hang on, let me just flip back here to this other thing. There we go. All right. Here we go. Let me just clear my throat first. All right, there we go. Good afternoon, everyone. Today's Wednesday, the 18th day of September, 2019. If you have not taken a free trial with us, and you want to take a free trial with us, go to the homepage at CFRN.net. And right over here on the right-hand side, it says 5-day free trial. If you click on apply.cfrn.net, it will bring you to this page over here. It says eminitrainingschool.com. You can go directly to eminitrainingschool.com if you'd like to. On this page, there's a bunch of information about what you get. And all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge, so we can tailor one-on-one training specifically for you. Okay, you hit the send button and you'll be sent a confirmation link. Now you must click on that confirmation link, right? If you don't click the link, we don't know you took the trial. Okay, so you got to click on that. Now, results. Everybody wants results. Today, well, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 18th day of September, 2019, and today we made 12 ticks in crude, 16 ticks in gold, and 1 tick on the ES. That brought us to 292.50 on the morning session. Today it took 48 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades. On the month now, we are up $2,851. That's over 12 days, averaging $237 a day. Now, right over here in the right-hand column, so nobody is deceived. These are gross numbers. It says gross right on it. All the gross numbers say gross right on it. These are net numbers if you had an $8 commission and if you had a $5 commission. If you have a commission lower than that, well, it's even better. But I just wanted to give a range because most people's commissions usually fall in between there. On the year, the gross yearly total, $27,618. That's over 168 days, averaging $164 per day. Okay? Okay. Let's go take a look at what happened. We started out right here with the gold. The first trade was right here. We had 1 tick profit on the first trade. Then the next trade that we took was right here, and we had 15 ticks profit on that one. We missed this one right here, but it would have been a break even had we gotten it. And then during the break, there was a nice short trade right here. Okay, and that was pretty much it during the break. Okay, this was a really nice trade though. If you'd gotten in up here on the down close off the BBC, that would have been sweet because I'm sure it moved really fast. Yeah, you see right here, there's 3 bars in 1 second, and then it slowed down. But that was gold today. Now the euro, we didn't do anything with the euro today. You can see this is from here to here is the whole day in the euro, and it didn't even give a trade setup. So we did nothing with the euro. Now crude oil, we did do stuff with crude. This is the level that I said it would pull back to. Now I said that before the crude inventories came out. It was about 10 o'clock, I think. I said, look for it to pull back to 58.60 was the number. And, well, anyway, let me go through the trade setups that we did. Okay, on crude, our first one was right here. We picked up 4 ticks on our first trade setup, and then we picked up 5 ticks on our second trade setup. We missed the third one, which would have had just a little tiny bit of profit in it. And then the crude inventories came out, and then it started jumping around and jumping around. And when we started looking at it again, when we let enough time go by, there was another trade setup right here that we missed. There was a break-even trade right there, and another break-even trade there. Trade here that we missed, and here we picked up 3 ticks to put us at plus 12. And this is the level 58.60 that I said it was going to get back to. It did it first over here, and here, and here, and here. And you watch. We'll see it come back to that again. Had another break even right in there. And then we got into the break. Now, during the break, I'm just looking at the slingshot. We didn't get anything during the break. Right now, it looks like, oops, that's not what I meant to do. Looks like right now it's starting to set up a shorting opportunity. It just broke through this dynamic support right here, and it looks like it's starting to set up a shorting opportunity. Okay, and we'll see what happens with that. The ES, it's Fed day, so the ES was just really choppy. We got 1 tick right here. We had a bounce off the BBC. It finally put in a higher swing, so we could say we had a trend, higher highs and higher lows, and we got 1 tick out of it. And it hasn't done much since then. I would just stay away from it until after the Fed meeting. Yeah, and that was that. Let me put my glasses back on. There we go. Okay, so back here to the spreadsheet, which if you're going to read it, you got to read all the CFTC risk disclosures down at the bottom. Today is the 18th day of September, 2019. We made 12 ticks on crude, 16 ticks on gold, and 1 tick on the ES. Put us at 292.50. I'm glad we broke that string on the ES. We had a couple of days in a row where we're down 8 ticks. Today it took 48 minutes and 3 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 9 trades. So on the month now, we're up $2,851. That's over 12 days, averaging $237 per day. On the year, we're at $27,618. That's over 168 days, averaging $164 per day. That is one contract, 2 hours per day. Okay, one contract, 2 hours per day. Now, if you have not taken a free trial with us, go to the home page at CFRN.net. And over here in the right-hand column, it says apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. On this page, you just need to put in your name, your email, and your phone number. And down here at the bottom, you can tell us, it's optional, but you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. All right? All right. That's it. And there's the short trade on the crude that I said was sitting up. And with that, we can pass it back out. The fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Excuse me. Dwayne is in there. All right. Dwayne must not be ready. So the shorting opportunity would have been this down close right here. And it dropped from 58.12 down to 58.04. So 8 ticks. And it did put in a lower swing. It's pulling back. Going to give another shorting opportunity coming up. You know, the only market that I would really consider trading between now and the FOMC meeting would be crude oil. Okay, because these other markets are going to be, you know, all over the place or nowhere at all. It's just my humble opinion. I did. Yes, that's okay.
Were you in the process of explaining something, or?
No, I was just pointing out, you know, I when I was going through the crude, I said, you know, it didn't really have anything during the break, and right here, it was given a shorting opportunity while I was explaining it, and it did give a shorting opportunity. The entry would have been right there, and it went down to there. Ooh, there.
Mm-hmm.
That's what I was saying. And I was also saying that, you know, the only market that I would trade between now and the FOMC would be the crude. Okay. These other markets are probably going to be pretty flat and choppy.
So, did you hear the stuff I was covering about what's happened in the last couple of days with the interest rate? Getting out of hand. And
spike 10%.
10%. Yeah, I mean, crazy. I don't know that that's ever happened before.
Yeah, so that is crazy.
He'll be hit with a lot of questions today that he doesn't typically get at a Fed announcement.
Yeah.
Now, some were saying it's going to look bad. You know, the markets want a 0.5% cut. And everybody's been saying, well, it's kind of hard for him to give a 0.5% cut when all the economic numbers are as good as they are. And I heard him reference some news that we got Monday or Tuesday. There was some number that was like 200% above what analysts expected. Are you familiar with whatever that was?
No.
Let me look just real quick here and see if it jumps out at me. If somebody in the audience knows, by all means, share it with us. Okay, so on Monday, the reports that came out were, I don't really see anything Monday, so let's try Tuesday. I thought it was industrial something. Now on Tuesday, I see we had a report, industrial production. It's not a high impact, and it came in higher than expected. But, no, it came in. That can't be it.
Yeah, it came in like 3 times what they were expecting.
Oh, are you looking at, which one are you looking at?
The 9/15 industrial production month over month. But it's a low impact. But
oh, okay, all right, yeah. So they were expecting 0.2%, and we got 0.6. Okay, so I guess it is. You know, the argument they were making is he really doesn't have any reason. He can't explain to people why he's doing a rate cut, but that's what the market wants. Now, this business that happened with this interest rate spike or the overnight rate spiking, maybe that gives him a valid reason. I won't even launch into potential conspiracy theories or anything.
Yeah,
like that.
I know. That's what I was just thinking.
Yeah.
Doesn't it make you wonder?
It does, yeah. No, it absolutely does make you wonder. Okay, well, let me grab the charts.
Okay.
What was the recap of the recap?
Today it took 48 minutes and 3 trades to get to $100 per contract. 48 minutes and 3 trades.
I'm sorry, I was trying to read. Just saw a tweet just popped up on my phone from Steve Croft. Do you remember him?
Mm-mm.
The Mind of a Trader.
Oh.
Just wondering if
okay.
it's the same guy.
Yeah, we bought all that.
I haven't heard from him. Yeah, that is him. I don't know why that just suddenly popped up on mine. My heart is absolutely broken right now. We had to say goodbye to this awesome. It's about. Oh, he liked a tweet from some lady who lost her dog. Now,
Oh.
I wish I understood the algorithm. I get stuff popping up on my phone, like somebody posts a picture or likes an image or something on Facebook, and for whatever reason, the algorithm decides I need to know that, and it just randomly pops up on my phone. Half the time, it's somebody I don't even know. I was just looking through my news feed on Facebook the other day. Half the stuff that's on there is posted by people I have no clue who they are. I don't know how that works. And same thing with Twitter. So anyway, that's not why we're here. Let me grab the charts.
I am just reading about that interest rate spike.
Where are you reading about it?
CNBC. Mortgage applications to purchase newly built homes jumped 33% annually in August.
That's where I was reading about it too, was on CNBC.
Fed loses control of its own interest rate on day of big decision.
Yeah. Boy, that just, you're right, yeah, that just doesn't look good. The guy that was writing the price alert code for us, that working with people in other countries like Pakistan. Is Pakistan a third world country? I honestly don't know.
I don't know.
I don't even know what the definition really is. But anyway, I was working with a programmer there, and he was, gung-ho and working on the job, and then he just vanished. And when people in those kinds of countries, when they vanish, it's not like you're in America, you're running a burger joint, and one of your employees doesn't show up for work. You figure they just hung over, overslept, or got hired by your competitor. But in places like Pakistan, especially when you're dealing with someone who has Christian leanings and they disappear, I mean, you wonder, have they been arrested or gotten in some kind of trouble? But anyway, that guy vanished on me. So I've been working with that code myself and creating a bot. So what would happen is, for instance, let me just show on the screen here what I'm talking about. In the alert channel, when an alert comes out, we'll just say for this one right here, to be short, crude at 58.90 to 58.80 and trail. Now that alert came out at 3:19 a.m. Eastern. So let's go to crude. Crude. All right. So so here's 3 a.m. Eastern, and Now this one's pretty close. This one only took, a couple of hours. So it was in this candle that the alert came out, and it was so this is not a good example, but here, let's do this. Let's say the alert was for this, which it wasn't, but let's just say it was. And I put it out over here. So what will happen is you will get, in the regular channel, you'll get the regular alert just like you always do. That part never changes. The part that changes is this part. When price gets, and this is where I'm hung up. With the different markets, I've got to assign different values. But what will happen is we've got a separate channel called the Logic 247 Trigger Bot. And so on this example, when price gets to, if we're going to trigger at 58.50, if that's the trigger, when price reaches 56.80, perhaps, a second alert will automatically go out, letting people, and instead of saying that, it will say price approaching alert number 2555. All automated because the bot is watching prices on the price chart. So you get the initial alert telling you what the alert is, and then I'm thinking with the S&P, it should be within about 2 points. I'm thinking with the Dow, it should be about 20 points. With the Russell, I'm thinking a couple points. With crude, I'm thinking 20 cents, but maybe all of those need to be doubled. So anybody that wants to put any input in on that, if you're a passport holder, if you are used to getting the alerts, and just think about the amount of time, because sometimes it's 5 minutes from alert to trigger. That's rare. It's usually more like a couple of hours from the alert to the actual trigger. But when I first mentioned this in the discussion group, everybody was just like, oh man, that would be the greatest thing since the alerts themselves, if you could actually do that. Well, I can do it. I'm doing the code myself. I found somebody to help me on a forum at no charge, which is nice. So I'll keep you guys updated. I don't see any reason why I can't have it done by the end of the week, but I'm not going to say I'll have it done by the end of the week, because if I do, then that guarantees that I won't have it done by the end of the week, because that's how Murphy works. You all know Murphy. Sometimes I think if it weren't for me, Murphy might be out of a job, because I keep him busy. That's Murphy the lawmaker, by the way. Okay.
Yes.
All right. So we were going to look at the Concierge Trade Alerts, so let us do that. They got out last night at 8:15 Eastern. If you want to grab a screenshot, you go right ahead. We're on the crude chart right now, so we'll just jump straight to crude. Consider being short. 57.90. We just got there. Now, there's an issue with crude, and let me talk about that.
Yeah, you got to cover it up. The arrows over the symbol.
Yeah, but I'm looking. I had a different crude chart with the zones on it. What happened to that? Everybody said, I didn't touch it. Okay. All right. Well, yesterday, I must have wiped it out to create another chart. The Concierge Trade Alert yesterday was to be short 50.60, if I remember correct. Yeah. 60.60. Okay. Now, that's yesterday. And from 60.60, we dropped almost to the zone below, which was 58.10/15. And I sent out a notice last night when we got, where were we when that happened? Anyway, I've lost my notes, guys. I can't go over that in detail. So when I figure it out, I'll share it with you later. But for now, let's just look at last night's alerts, which I just gave you so you can take a screenshot. 57.90, the trigger, because I was trying to get on the other side of the zone. Here, this will clarify it a little bit. We have a zone right here at 5810/15. Oh, I sent out the warning. I think it was, yeah, because see that yesterday 60.60 was way up here. There it is, right there. We had a Concierge Trade Alert that went out Monday night, which triggered yesterday on the 9:30 open, and we ran down almost $1,000, $800 per contract. Then we got back above the trigger, did it again. So the message I sent out last night is anybody that was still short from this crude alert, waiting for the zone below or the trade to target, they might want to consider taking profit right here. Is when I sent the message out, because I saw this starting to happen. But we finally made it, and now today we're plowing through 57.90. We've already hit a swing low, 57.68. So that's $200 per contract traded so far on crude from last night's Concierge Trade Alert. Sell 57.90. And that's the reason this is so low, because as I put this out last night, price was starting to climb and we weren't sure. So anyway, there's that. All right, so that's the deal on crude. Let's jump to the S&P. Now, these are last week's zones that you see on the chart. As I've always said, you know, and Michael and I both said, the carryover effect of the zones is quite profound. Here we are on Wednesday of the new week. Partners got the new zones Monday morning, 6:15 a.m. Eastern. But look at how last week's zones have perfectly contained price since we got back inside of them after that gap lower open. Did you hear me talking about this earlier?
The gap lower?
Well, we closed the week inside of a weekly trading zone that was created for the U contract.
Mm-hmm.
And then we gapped open Sunday night inside of a zone, the one directly below, that was created for the U contract. I just thought that was one of those things that make you say, gap from zone. Now, we're used to seeing it trade zone to zone. I don't know that I've ever seen it gap zone to zone. But anyway,
yeah, no, that's new.
all right, on the S&P last night, consider being short at or below 29.89. We had no trigger, not on the long side, not on the short side. That's 2 days in a row that we have not triggered on the S&P because of this sideways shuffle into the Fed. On the Dow, we may have the same story there. On the Dow, long 27155, no trigger. Short 26960, again, no trigger. The Russell, I bet the Russell's got a trigger. Russell really been dancing to the beat of a different drummer here lately. On the Russell, short 1580, so there's a trigger. And the swing low so far, 1567. So that would be 13. Alexa, what's 13 times 50?
13 times 50 is 650.
Okay, so $650 per contract traded. Now, we all know it's difficult to get out at a swing high or swing low because you don't know it is such until after the fact. However, when you get into an extended move like this, you can use the exit signal. We don't have an exit signal yet, but I'll tell you what it's going to look like when we do get it. This black step line, which is on the left side of the red and falling CFMA1, the step line will cross over. Look up here. You see how as we're rising, step line's on the left side, and right here it crosses over to the other side, and the first red candle that closes below that step line, that's the exit signal on a long trade. So when this crosses over, we'll be looking, after the step line crosses, we'll be looking for the first green candle that closes above the step line. That will be the market saying this move, or at least this leg in this move, is running out of steam. You might want to take profit. You see here how price started to walk sideways, and price started to walk sideways. Down here, price will start to walk sideways, and that step line will cross as we run out of steam. Can you open John's mic for me, please?
He's not in yet.
Oh, he just dialed me. Okay, I didn't answer. I thought it was just an alert. So maybe he's having an issue. So let me just dial him back real quick and see.
Yeah, I've been looking for him.
Let me see what's really going on. All right, I'll hit mute for just a second.
Okay.
Hey, John.
Are you having some?
And so a green candle closing above the black step line is an exit signal. John, I wouldn't recommend being in the market when the Fed comes out. Okay, not even on a micro. Okay. We just don't know what's going to happen, and there's so many different things that could happen right now. Now, if the market gets what it wants, then it could go way up. But with that rate spike from last night, I don't know. I'd wait until after and give it like 20 minutes or something like that. The only time I've ever had a stop jumped was when I was trading during a Fed announcement. Yeah. The Concierge Trade Alerts, or whatever numbers you have on those, are still good. Great. And the ES right now is just stopped. It's been right here at 99.50 for, well, let's see. For a full minute, it's been at the same price. So that's what I was saying this morning in the room. As we approach, it usually doesn't happen until like noon. But once we get closer to the Fed announcement, then it might pick up steam. But you definitely don't want to be in the trade during the Fed announcement. Okay. Man, I get something to clean these glasses. So right now, what are we looking at? The Russell. Let me bring up a Russell chart.
Hey, John.
Here he is.
Welcome to the show.
He is in.
Okay. Guys, we'll pick up on this recap right where we left off with the Russell as soon as John and I finish talking. Are you there, John?
Okay, sorry. Good morning.
Yeah, good morning. Welcome to the show.
Good morning.
Thanks. A little bit of an ease off in the markets today after kind of going up yesterday. So I don't know whether this is a pre-Fed jitters.
Well, have you
or
read
something
about
like
this
that.
this cash crunch, this interest rate spike?
Yeah.
Oh my
I mean,
goodness.
they're obviously moving mountains. And somebody sent me a thing. I'll read you the headline. It's kind of hard to believe. It said, "Oh, something's going on with my. I'm having some trouble with. Oh, here we go. Here we go. Yeah. overnight interest rate surges to 10%. Fed injects.
I just read that to the
75
audience,
billion.
John. Yeah, I just read it to the audience. That's crazy. I've never heard of that before.
Well, it doesn't seem to be affecting the bonds, but maybe the bond tightening, the interest rates going up in the last week could have contributed to it, and now it's flowing to the short-term market rather than the long-term market. So maybe the long-term market was a kind of a precept of it, precedent. And now the short-term market. Actually, it's going to be interesting to see what the Fed, they're probably going to get asked about that this afternoon.
Oh, so, yeah, I think that's going to be a huge topic of their conversation.
Yeah, and, we're never say never, we've said this a number of times, something could go wonky this year, and we could have, even though the Fed might even lower rates today, hopefully a lot, and before you know it, they might have to tighten in a few months' time, and we might go up quite sharply because the the way the bonds are acting, having gone down, they dropped, the bonds dropped the same amount in a week, or a little over a week, that they dropped into the '87 crash, But remember, the interest rates were a lot higher, in the '87 crash scenario. So I don't think this is that big of a deal, but it certainly tells you there's something going on in the economy that might be, underlying strength. Look, the numbers are all still out there. Trump put out some numbers this morning. California, even though there's a Democratic governor in California, California is in pretty good shape. They got a surplus, the state surplus. When did you think that would ever happen?
I don't really understand that. They go from being not only dead broke, but from what everyone said, on the verge of bankruptcy, and now all of a sudden they're flush with cash. I don't understand. And this Gavin Newsom, he's got homeless veterans living in the streets in California, and he's going down to El Salvador trying to recruit more homeless people.
Yeah, I know. I'm not sure if I said it on the show, but I said to somebody that if we saved, like if they got the interest rates down to near zero, and the annual debt payments went from 350 billion down to maybe 150, you could save 200 billion. You could solve the homeless problem with that kind of money, for everybody, and maybe solve the veteran problem. And I think, an idea, it's that if you serve your country, they should, in fact, be very good for the economy, because they could have a home building, or even that we talked about it yesterday, the homes that are in disrepair in Detroit and places like that, in Baltimore and all these other places. What's not to, in some of these cities, you could create smaller homes, affordable homes for homeless people, give people a bit of a leg up, and get rid of this problem. Because it's really it's a scourge. It's a blight on the big cities, and nobody likes it. So it's a problem. I'm saying that if you serve your country, part of signing up, you get some kind of support down the road, a safety net in the future, because a lot of these guys end up on Skid Row,
Yeah, they've got a program here in Phoenix where they're helping. We've heard us talk about these tiny homes that are sort of all the rage in some areas, some circles. There's a neighborhood. I don't know how they come across the land, but it's some veterans organization. They're starting to build these tiny houses, and they're actually taking, homeless veterans. I don't know what the selection process is, but they're taking some homeless veterans off the street and putting them in these houses, which is a good thing. When you go to, most major cities that I've been to, homeless roam about freely. Some say that's their right. I know that some are addicted to drugs and alcohol. That's the problem. Others, without any type of illicit drugs, they are honestly mentally ill. There's something wrong. And there are those who choose it as a lifestyle. They're perfectly healthy, in their right mind. They just don't want to work. They don't want anybody telling them what to do. Okay, so that's a problem in America. When you go to London, and I may be wrong, and maybe I was just in the right area, I never saw a homeless person in London. I didn't see anybody pushing a shopping cart piled up with, all their worldly belongings. And I asked about it when I was there. I also didn't see it in Ireland. I also didn't see it in Amsterdam. I didn't even see it in Kampala, really. But so I asked in London, and I was told that the law there doesn't allow for that. That if you're on the street, if you're loitering, you're going to get arrested. If you're mentally ill, they're going to put you in some kind of a, mental health institution. So do you know what the law is and how they deal with their problems there? Because you've seen the pictures of LA, you've seen the pictures of San Francisco.
Yeah, there's a little bit over in the UK, but not as bad as the UK.
Well, do they have a way of dealing with it that we don't use here because we're afraid we'll violate somebody's rights?
I don't know.
Okay, I was just curious. I don't know the answer, that's for sure. How does Europe handle the homeless problem? What can the UK learn from how Finland solved homelessness? Okay, Finland was on that list of the top.
Well, they got a big problem in Paris. Remember now with all the immigrants, camping out on the banks of the Seine.
Here's how Finland handles it: by giving homeless people permanent housing as soon as they become homeless. Okay, now who pays for that? In Housing First, that's their program, people do not have to earn their right to housing by proving their capability to manage their lives. Instead, they're provided with a stable home and individually tailored support. Interesting. In California now, the government will give you a plastic syringe if you want to shoot up dope, but they won't let you use a plastic straw. What? Anyway, let's not get too far off the beam here. So, John, I have a swing trade on with bonds that you just brought up. We just triggered this morning, 160.10. So what do you think this Fed announcement, what impact will this Fed announcement have on the bonds?
It should push them higher, but, there might be a spike down first. It's a very tricky kind of situation. And for some reason, we're giving up, we're coming off pretty fast here on the market right now.
The Russell seems to be leading to the downside. S&P is right at support.
Yeah, we've actually got a little setup here that could turn very negative. Depending on what the Fed does, I guess. We've kind of gone to a little bit of a sell bias here in the last few days. In fact, look at the Russell 2000 is getting creamed here.
Yeah, it's leading to the downside right there.
Yeah, substantially. And the NASDAQ has been weak, leading the way down over recent days as well. So I think that that's a problem. But right now, there's something out there that's bothering this market. I don't know what it is yet, but it's definitely, look, you remember last time they lowered rates, the market tanked initially. Remember that? Went down about 300 to 500 points.
What was the date, John? I'll go back and we'll look at that chart. Do you recall?
It was September. Maybe it was the previous time they did it, but anyway, it was September. It was the beginning of. Sorry, it was August, end of August, August the 29th or 30th.
Okay, end of August. So, could it have been here?
Or was it, wait a minute, July, August? No, it was the end of July, sorry.
Okay, well now here's...
when we tanked substantially.
Here's July 31st, right here. Yeah, that was a pretty good decline. We went from 29.97 down to 27.97. So yeah, a couple hundred points. That's 2,000 points on the Dow.
Yeah, yeah. So maybe the market is getting the jitters here, thinking the same thing could happen, and it could. You know, we talked about a possible one more leg down before we go up, substantially in the next few months. And in spite of the fact that Trump put on sanctions on Iran, I wouldn't be surprised if that's just a, if anything, if he's going to put on an attack, it's going to be one of these complete surprises, where he just calls a news conference and said, they already started.
Boots are already on the ground, but hopefully he won't put boots on the ground. He'll just do it from the air.
Yeah. It's funny. Somebody came out in a tweet I saw yesterday where they, Reagan basically sunk the Iranian Navy back in '87 when they had all these problems with the ships being attacked, and that basically solved the problem. And I think that
a show of force right now, a show of force will make them think twice about their next move.
Well, I think if they did it before, instead of letting him off with the drone, if they'd done it the last time, I think this probably wouldn't have happened. What we just had this weekend. But I think that they're gonna have another shot at it at some point. This is just the opening salvo, especially if they don't retaliate. They're probably going to get more aggressive.
Absolutely, that's exactly what will happen. And if at this point, because they've said, we're not backing down. You either remove those sanctions or there's going to be trouble. I mean, they have threatened us. They've taken action against one of our allies. Trump hasn't done everything perfectly. I mean, I know he says some stuff that aggravates you and me. Sometimes it's not the substance of what he says often, it's how he says it. It's as if he intentionally wants to antagonize people. And, he's been beat up so much day in, day out since he took office. If I were in his shoes, I'd be a lot worse. I'd probably be a lot more sarcastic. I'd have probably just handed him the keys to the Oval Office and said, you know what? I don't need this crap. I'm a billionaire. Leave me alone. You understand what I'm saying? Hang on just 1 second. Go ahead, John. I'm going to be right back.
So, got a kind of a dichotomy going on here today. The wheat and the corn are higher, and the beans and the soybean are actually taking it on the chin pretty hard. I think I'd move my buy stop on the beans down to 8.95 now. Probably maybe even 8.93, somewhere like that, just in case there's an up move. You'd probably catch it.
I'm back, John.
Yeah, I was just saying the beans are the corn and the wheat are up, the beans are down. So remember I said put a buy stop at 900. I'd lower that down to about 8.95 or 8.93. And
here's soybeans on a daily,
because it's still got a kind of a bullish structure to it. So I'd put it to 8.93, so that if there's an up move tonight or later on in the day, you could be captured into it, and that could be
this pullback could take us down to this 38% fib or this 50% fib.
Right. So I think I don't want to buy it just yet. I want to buy it on an upswing.
On the upswing. No, I hear you.
Yeah.
I believe in that.
Have a look at the wheat. Have a look at the wheat. See what that looks like, and the corn, because they're up today. So.
Okay, ZW. There's wheat. Okay.
See, it's a different picture altogether. Which means that the beans could swing to the upside here before the end of the week, and the corn as well.
Let's look at the corn.
The same sort of thing.
It's waking up, but a little bit slower.
Yeah. The oats is a bit weaker, so that's a little bit of a warning sign. So
I don't know if I have that. Is that it? Zeo? Yeah, there it is.
Yeah.
Okay. There's oats.
It's been quite strong, but it's probably pulling back like the beans are. So I'd probably put a buy stop above, maybe 2 280 or so on the oats. The lumber is breaking out to the upside.
I'll need my other platform for lumber. Lumber, here we go. What month are you in?
Probably November. Yeah.
All right, there's November. That's
Yeah,
monthly. Let me break it down to a daily. There you go.
Yeah, it's been reasonably firm. Oh, we were looking at that yesterday. Yeah, so the fact that it's breaking out at the highs is encouraging. But if it ends up as a doji today, then watch for a possible down move off the lumber. That would be a negative doji, by the way. So
a negative?
Well, that little doji that's forming above the market today.
Gotcha.
Yeah. We take a look at the gold and silver.
Absolutely. I just want to grab a quick look at the
yeah. I mean, if you look at the
cash
S&P, even though it's down, look at the way this thing could break out and go higher here. I think if it does do that, it's probably going to have a multi-day run to the upside, and then you've got that island bottom as well. Remember, so it kind of looks pretty.
We came real close. The swing high here was 3020.7. Swing high here was 3028. So we came within just a few ticks of reaching the all-time historic high. Now, my interpretation of how this would play out, or my thoughts, were that we would touch it, spike above it a few ticks, a few points, and then fail. Do you think we failed before getting there, or do you think we still got one more push to the upside?
No, I think it's got more to the upside beyond this. Yeah.
And we certainly have a huge catalyst coming here shortly with this Fed announcement.
Yeah, exactly.
And the Fed's never been.
I mean, it could be down to start with, but if it doesn't go down, I think it's very bullish.
Yeah. Okay. Now you asked me to go to gold and silver. We'll start with gold. There's gold. That's on the daily.
I think the gold is potentially vulnerable to the Fed too. If it may actually spike down.
Okay, now if the Fed gives us an interest, and I'm just talking in general here, when the Fed cuts rates, isn't that typically bullish for gold?
Yeah, but it might be a case of gold having rallied over the last few months in anticipation of lower rates.
Okay.
And then the lower rates come out. Maybe there's because if we did have another leg down towards the 1425 area, 1400 maybe. Then I think after that, it could go straight up from here, but if there is another leg down, that's where I think it's going to go, and then that's a kind of a three-wave correction, and then after that, I think there's a much bigger wave, above the market, and probably into the end of the year.
Let's peek in on silver. Yeah, silver. If we can get above that $20 mark, I think this thing could go from 20 to 30.
Yeah,
quick.
I mean, the only other thing is there going to be some sort of an amazing? I think if he does half a point today, there'd probably be a surge up in the metals. Whether a quarter of a point will do it remains to be seen. So,
yeah, I got another question for you.
Actually, look at the last time. Look at July, the last time when the Fed did it. Yeah, the end of July, we still went a good bit higher. Sorry, at the end of July when they did the last rate.
Gotcha.
So
how if we get a quarter or half a point interest rate cut, how should that affect, or what effect do you think that will have on the British pound? Because we're in a swing trade right now. Prices come back to the entry, important prices, important areas, almost always tested. So we came back, got below the trigger, and we're taking off again. So what are your thoughts, John? If we get a quarter, half, what happens to this chart?
Pretty strong. And, yesterday the dollar got knocked down. The dollar is key to the Fed too. The dollar could go either way. It's a tough call.
Okay. Well,
But
all of you that
remember,
are in this
when
swing
the dollar,
trade, keep that in
yeah,
mind.
the dollar. I mean, right now the currencies are pretty much at the highs of the day across the board. So maybe, and that's usually when they're going into news. That usually means there's going to be a continuation.
All right, well, we'll watch this carefully. Now, our bonds triggered also. We had a swing on bonds, and let me bring that up. Right here. I've got this set on a line chart. I was just messing around with my candlesticks the other day on this chart, but here's where price is right now. The blue line is price. So we triggered long at 160.10. What do you see as potential upside?
It's a tough one, that one. You know, it could go back up to the 162.3 area. Put up FedEx. Something happened with FedEx today. It's really bad.
I'm shooting for 162 on this, so FedEx, okay, coming up.
And it's pulling the transports down as well, which is...
What's the symbol?
FTX.
FTX. Okay. All right, that's the daily chart. Wow, look at that volume spike.
Yeah.
Look at this gap lower open. What in the world did happen?
They must have come out with bad guidance or something. But,
let's see.
up $20. That's
FedEx News. That's an hour ago. Kramer, FedEx holds most dispiriting call about the economy I've heard in a long time. Okay, this was published 2 hours ago. FedEx CEO Fred Smith is basically implying that we're going to import a global slowdown. Shares of FedEx plunged about 14% after the company reported weaker than expected, what you just said, earnings and revenue, and warned on full-year guidance. AT&T CEO Randall Stevenson on Tuesday shares similar economic sentiments while presenting at the Goldman Sachs conference. Wow. Now, what effect has this had on Amazon? Any?
Well, Amazon is becoming more of a competitor to.
Well, they're trying to implement their own shipping. They're taking that contract away from FedEx, correct?
Yeah, the Amazon's chart doesn't look very good. Looks like
it does look weak. Yeah. Now, if we could trade 1860, it would start to look bullish again. 1865, that would be very bullish. But
I think that FedEx is a bad omen. That's probably part of the thing that's dragging the market lower today. So,
who are FedEx's competitors? Is it DHL?
UPS.
Is that their symbol? Yep, I guess it is.
I think so, yeah.
Okay. All right. Well, they gap lower, but they've recovered.
Maybe they're doing a better job than FedEx right now.
Is DHL still in business?
Well,
it's certainly not that company there.
I don't think it's public. I think it's private.
Oh, is it? Okay.
Yeah.
Is there anybody else that competes in that space?
There is Dominion Freight. Not sure if they've got
Old Dominion Freight Line?
That's the one, yeah.
Okay. Doesn't look bad.
No problem with them. They're a pretty well managed company, actually.
Yeah, it looks like it.
They've been kind of a dark horse going higher. Maybe you can put more history and see how well this company's been doing. Yeah, it's one of it's definitely doing a good job in the freight business.
Well, they really are.
The other one would be JB Hunt, JBHT.
I can't believe you said that. I was just fixing my dad. His midlife crisis, he didn't go get a girlfriend and a convertible. He went and got a semi. I kid you not. He woke up one day and decided he had some romantic idea about being a long-haul trucker. So him and my stepmother go out and they buy a semi, and then he goes and gets a license and starts driving for JB Hunt.
No,
he
JBHT.
did that for about, what is it?
JBHT.
JBHT. And so he did it for about 2 years and got it out of his system, sold the truck, and went back to some ordinary job. Okay.
Yeah, it's doing okay too. So this FedEx is really a kind of a isolated thing right now. But
I mean, losing the Amazon contract, I don't know how imminent that is, but That's got to be a big blow.
Mhm.
Losing that contract, I would think.
Well, Amazon are definitely moving into the shipping business in a big way.
I've been seeing headlines lately about Black Friday. And Black Friday doesn't come till Thanksgiving. What's all the talk of late? Why is that such a topic? Any idea?
I don't know. The Baba one comes up. It's only a month. We're only a month away, I think. From is it 11/11? The Baba one in China.
What's it called?
I think it's called Singles Day
Singles
in China.
Day. Yeah, you're right. Singles Day. Wait, I never understood. 2 months to Singles Day. Hey, it snowed yesterday at the Cal Neva Lodge, which it's on the Cal Neva Lodge. Al Capone used to hang out there, so did John F. Kennedy and his brother, and Marilyn. It's this old lodge right on the California-Nevada line. And I showed a picture yesterday. You know, it's 100 degrees here in Phoenix, and it's snowing up there. So let's just see. Singles Day, held annually on November 11th. Began as a festival of young Chinese people celebrating their pride of being single. Alibaba started promoting the day as a shopping day, now officially called the 11/11 Global Shopping Festival. This is a big deal. Now, the word pride jumps out at me because something I read yesterday made me stop and think. If you burn a gay pride flag, you know, the one with the rainbow colors, if you burn a gay pride flag, that is considered a hate crime. If you burn an American flag, guess what that's called? Freedom of speech.
Yeah, I know. Terrible.
I don't care what people do, you know, behind closed doors in the privacy of their own home. That's between them and God. It's not my business. But you're going to call one a hate crime and the other freedom of speech? Something's really gone wrong. Anyway, what do you want to look at now?
I think we've pretty much wrapped it up for today.
Okay, John.
Well, you know, it's kind of just have to see how things go here. The oil's come off even more overnight. They got all the I mean, it's pretty amazing. They got the production back up and running almost to full capacity in Saudi. So that's amazing recovery. So
what are we, 30 minutes out from the Fed? Is that right?
Yeah, just about.
Now, I've still got some ground to cover here with the audience. So once the announcement comes out, you can check if you want to. I might still be on, and if you want to pop back in,
okay.
certainly
Okay,
welcome.
thanks very much.
I spoke at length yesterday with Garrett. He's
Oh,
moving.
yeah?
Yeah, he's leaving California. He confused me at first. I thought I said, well, when are you moving? He goes, well, I got to be out of here by the end of the month. So, boom, immediately I'm on the computer finding him a house to buy up here on South Mountain so we could work together. And then he's like, well, hang on. He goes, I've got to get another place to rent here. I sold my house. So it's going to be like a year before I move. I was like, oh, well, that changes things. But I told him that you had some questions for him, and he's definitely going to pop on either. Well, since he didn't come today, he said, I'll either be there tomorrow, Dwayne, or I'll be there Friday for sure.
Okay,
So
great.
he'll be with us on Friday. So, all right, John.
Thanks a lot.
Thank
Have
you.
a great day.
Talk
Bye.
to you soon. Okay, on Concierge Trade Alerts, if you did not grab a screenshot and you want a screenshot, you can have a screenshot, okay? So we've talked about the S&P. It just triggered. I'm not the S&P, the Crude just triggered. Then we talked about the S&P, which has not triggered, okay? No trigger on the S&P. No trigger on the Dow. Russell leading to the downside. We did, in fact, have a trigger. Concierge Trade Alert said to consider being short 1580. We're now at 1565. So that's 15 points. So $750 per contract traded. And we still don't have an exit signal. Let me show you one more time. Exit signal. this exit signal that we get with our indicator set, that's only good on extended moves. On a short move, on an ordinary swing, as an example, the S&P, the average swing under normal market conditions is 3 to 5 points. We know that price channels back and forth all day long, whether the markets are rising or falling. Price goes like that, and then it goes like that, and then it goes like that, and then it goes like that. Leg retrace, until it can't go any higher, and then it starts building legs in the opposite direction. Then we say the market is falling. It will keep falling until it runs into a wall of buyers who are more committed to their position than the short sellers, and it will turn and start building legs to the upside again. So the market is always building legs, and the market is always trying to get to a weekly trading zone, either the one above or the one below. Okay. Now, this week on the Russell, let me take a peek. We have a zone at 62/63. Pretty safe to say that the Russell is trying to get to the zone below. Now, I know that sounds like a big statement, you know, kind of hard to, if you know anything about markets, what I just said, that something is always trying to do something. I didn't say price sometimes tries to get to a weekly trading zone. I stand by what I said. Price is always trying to get to a weekly trading zone, either the one overhead or the one below. Now, the zone overhead in this case, or the zone it just passed through, is 1573/74. Now remember, these zones go out to partners and passport holders every Monday morning at 6:15 a.m. Eastern. So everybody has plenty of time to get their lines on the chart before Wall Street opens. Once we publish the zones, they are carved in stone. We don't massage them or manipulate them or change them in any way throughout the course of the week. Okay, now the zone above that was 1586. Come on now. 1586/1587. Okay. Yeah, it looks like I might need to go. Okay, what was above that? That's an old zone from last week. So above 86.87, we've got 92.93. So there's 92. And there's 93. Okay. All right. Sunday night, Globex Open. That would be the 15th. So there's the Globex Open. So we gapped open, found support at a weekly trading zone right here. Now, once we find this support and price starts to rise, we have this bullish cross. So at any point along through here, you can look at this chart. If you were blindfolded and I spun you around a few times, sat you down, took off the blindfold, and gave you 20 seconds, and that's a lot, to look at this chart, you could tell me that based on what I teach you and how our indicators work, you could tell me that price is definitely trying to get to the weekly trading zone overhead. You could have told me that as early as here, 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 anywhere along here. Did price go to the zone overhead? It absolutely did. Okay. Now, when price gets to a zone, only three things can happen. The most common thing to happen is consolidation, which looks like this. Okay. Now, right here, we have two candles touching this zone. So if I dropped it down to like a 5-minute chart, you'd see a number of candles here consolidating at the zone. And when consolidation, what's happening here is the market is trying to make up its mind. Is it going to go to the zone overhead, or try to go to the zone overhead, or is it going to try to go to the zone below? That's what's happening in the mind of the market during these consolidation periods. So there was a little consolidation here, and it said overhead. The popular vote was for overhead, and we went right up to the zone overhead. We spiked it. A lot of bullish momentum on that move, but it ultimately held. It held and sent us back to the zone below. Okay. Now, this wick right here tells a big story. It tells the story of a market that has been very bullish, has run out of steam, and is now going to attempt to get to that zone below. Now, we spiked the zone below, but recovered. We didn't quite touch the BBC. So back up to the zone. Now, this move from zone to zone, from 87 to 92, it's 5 points, $250 per contract traded. So it's 250 up and 250 down and 250 up and 250 down. Now, here's where the dynamic changes, right? This is blue and climbing. So as long as that's blue and climbing, price should be going higher. Pull back, higher, pull back. You see what changed is this time price ran into a red and falling CFMA1. You always have to consider that has the potential to be good resistance until it isn't. And in this case, it indeed was good resistance, and it walked price right back down to the zone where we consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about 12 hours. Okay, consolidation at the zone for about 12 hours. Now, notice that the red CFMA1 got below the BBC. Price got below the BBC. When price is below the BBC, we anticipate lower prices. When price is above the BBC, we anticipate higher prices. So you see right here, even through this consolidation, we had the bullish cross. We're hugging, but we're above as we hug the BBC, and off we go to the upside. Here is the exact thing in reverse. We're hugging the line, we're consolidating, but price is below the BBC this time. And when it finally gets its move on, we know that price is showing us that it is trying to get to the zone below. We had an alert right here, triggered. When that triggered, our trade to target is 1574 because that's the zone below. Price is always trying to get to a zone. Once you're able to discern which zone it's trying to get to, then all you have to do is look for a high probability, low risk entry. So from here, 1581, I guess it was. Well, here, let me just scroll up and see. Oh, it's right here. This was the alerts that went out Monday night for the Tuesday session on the Russell. Consider being short at 1582. Okay. So when we trigger that short at 1582, all of our traders know that the market is trying to get to 1574. So from 82 to 74, that is 8 points at $50 per point. That's $400 per contract traded. So price comes down to the zone, which we expect to be good support, till it isn't. It was over here. It was again over here. Okay. Good support means price is going to try and rally, which it did try to do. It got close to the zone. It just didn't have enough of the right stuff to get it there. The swing high was 1584.70, so we're about 13 ticks off touching the zone. When that happens, right now we're still above the BBC. So in through here, we recognize we're above the BBC, and we, anticipate higher prices until prices below. But we also know that we came that close to the zone and failed, which means the market may not have enough of the right stuff, which would be buyers in this case, to take it there. So we go into this extended consolidation. Remember, these are 30-minute candles. Prices above the BBC and then below, and then above and then below, and then above and then below. When you see that, keep your hand off the mouse. That right there is not conducive to trading. That is what some people will call whipsaw. You can burn up a lot of your trading account in these kinds of conditions. Stay away. Finally, the market gets a move on, okay? We took out that low and that low, which is why we had this alert here. We knew that needed to be done. 1580 down to 74. That's a 6-point move. When this triggered at 1580, there was no question in any of our traders' minds which zone price was trying to get to. I mean, just ask yourself. At 1580, looking at this chart, if you couldn't see all of this down here, would you think price was trying to go lower or higher? Well, obviously, you think it's trying to go lower, and lower it went. This is called the slice. Only 3 things can happen at a weekly trading zone. Consolidation, most likely. Rejection, second most likely. The least likely is the slice, but we do see it happen. And when that happens, here's what we anticipate. When we get a slice, that means this zone failed at being good support. Remember, on Sunday night it was good support. Here it was good support. We expect it to be good support here until it isn't. And it wasn't, right? When this move runs out of steam, we expect a retracement back up to the zone, because if it failed at being good support, we now need evidence that it is going to act as good resistance. If I broke this into a smaller time frame, you'd see it more clearly. But this candle closed here, opened here. This was a green candle for a minute. It ran up, touched the zone, confirmed good resistance, and it's now taken us almost to the zone below, and we have no exit signal. So if you had gotten in at 1580, the trigger published on the Concierge Trade Alerts, and you were waiting for an exit signal, and there isn't one yet, this was initially your trade to target, but when we sliced through it and did not produce an exit signal, no reason to get off the horse. And now we're down to 64. So that would be 16 Russell points at $50 a point. Now, what will happen when price touches this zone? The most likely thing is consolidation, which looks like this. I do have rejection. I do have rejection right here. You see how when price opened here, it ran down, it touched the zone, and then backed off immediately and left a wick in its wake. That's rejection. Okay. So in a few minutes, when price gets to the zone, we're either going to see consolidation, rejection, or possibly another slice. Okay. Is there a zone below that? Now, the ones that just came into view are last week. So below 62.63, there's only one more. Only one more zone. So let's get rid of this one. And this one. The lowest weekly zone is 37/38. Lowest weekly zone for the Russell. Now the distance, Alexa, what's 62 minus 38?
62 minus 38 is 24.
Okay. Alexa, what's 24 times 50?
24 times 50 is 1,200.
Okay. So the distance from this zone to this zone is $1,200 per contract. Don't jump the gun. We got to see how price will react when it gets to the zone. Does it consolidate? Does it get rejected? Does it punch right through it? If it punches right through it, we want to wait for price to pull back up to the zone, confirm good resistance, and as it starts to move lower, then we are ready to participate with a trade to target down at 37/38. Now this chart gave me a good opportunity to explain a lot of things about weekly trading zones, about Concierge, how we look at them, how we trade them. So if you have questions, put them in the box, because I'm just going to breeze through the rest of them. All right, so if something comes to mind, put it in the chat box. I'll answer it. Okay, so we've covered crude. We covered the S&P, no trigger. The S&P hit that zone, right? Now what's it doing? Is it acting as good support? So far, it was good support here, and here, and here. We gapped into that zone. Oh wait, I've got to adjust these to this week. This week, it's 29.94/95. The one overhead is actually 3013/3014. But look at how beneficial it was to keep in mind where the zone was last week. If you're not a partner or passport holder, when I give you the zones during the week, typically on Thursday, you should jot them down because they might actually help you. And those of you who are passport holders and partners, I suggest you keep a little, don't put too many lines on your chart. That gets confusing. But you just might want to keep a little list. Or, well, you've got it in the Telegram channel, so you can always refer back to that. All right? So 94.95, that's this week's zone, and we just touched it to the tick, 29.95. And we've already bounced 3 points up to 29.98. Okay, we've already looked at the Dow. We looked at the Russell just now. NQ. These are last week's zones. So right here, we're turning up at a zone from last week, 78. Now this week, that zone would be 78.61. Like we missed it by a tick. Yep, 2 ticks. 78.61.50 was that swing low. 78.62. Oh, come on now. There you go. Okay, the zone above that is 79. Okay, so we won't need this zone. Or this one. Now we're going up to 31/32. Okay. There's the Sunday night gap lower open. Okay. Market did not have enough of the right stuff to get it all the way to the zone. It turned. I'll show you with the indicators in a minute, and you'll see that turn, and you'll see when it becomes tradable to the downside. Because it's tradable to the upside. We don't get all the way there. The indicators show us when we should start trading it to the downside. I'm going to show you that in just a second. 31.32. 61.62, and below that is 77.85. $77.86. There we go. All right, I'm just gonna get rid of this for now. All right, do a little scrunch. So on the gap lower open, we hit this zone, traded through it, couldn't make it all the way to the zone below, came back, consolidated, a leg and a retracement, a leg and a retracement, a leg, and here we are, right back at the zone. Now the concierge last night was to consider being short, 78.55. Now that was yesterday, so last night was up here. What do we have on the long side? 79.11. Okay, so we had a trigger at 79.11. $79.11. The swing high was $21.50. So 10 points times $20 per point, $200 per contract traded. Now, I didn't point out this move on the S&P. Right. I'm going to have to scrunch that. This gap lower open that we had Sunday night. Gaps on the indices almost always closed in the same session, sometimes in a couple of hours. For it to take a few days like this is unusual, but it happens. The closing price on Friday was $3,950. The swing high this week is $3,009. So that gap actually hasn't closed. We needed 2 more ticks to close the gap. Okay. Now on the Dow, when one of the indexes gaps open on a Sunday night, if the S&P gaps, you can take it to the bank that more than likely the Dow, the Russell, and the NQ are going to follow suit. Okay. Now the Dow hasn't even come close to filling the gap. The Russell, the Russell closed the gap Monday, and then some. Russell really dancing to the beat of a different drummer this week. Okay, in Q, where we're at right now, the close on Friday was 79.10.75, and so we officially closed the gap on the NQ. And then there was a $200 per contract move right here based on last night's Concierge Trade Alert. And then I said I was going to show you, and I am. Okay, when price is consolidating here, making up its mind what it's going to do, and then starts to move higher, when does that become a tradable event? And when it fails to get to the zone overhead, when does it become a tradable event to the short side? Let me show you. All right, see that bullish cross right there? See that? Blue line gets above the green line. Okay. That's when it becomes a tradable event. You can enter anywhere along here. Now, if you want to be patient and wait for our classic textbook highest probability setup, price, you get a bullish cross, price pulls away. By pulling away, I mean price is not physically touching the BBC anymore. Then price pulls back to physically touch the BBC. Up close by the open of the next candle. The candle opened at 78.8175, so we'll call it 78.82. Let me write that down. Now, this is when you're flying on your own. You're flying solo here because I didn't have an alert at that price. But if you understand our methodology and you know how to read the indicators in the chart, you don't need me, okay? You only need me to teach you. And then once I've taught you, you're your own man, all right? So 78.82. Price is rallying, looking good. That's what price looks like when it walks sideways. This is what it looks like when the step line crosses a blue and climbing CFMA1. Okay, perfect, just a beautiful example for you. Okay, using our classic textbook entry. Now, Michael teaches you this on a range chart in the morning in the live training room, but the underlying principle, the logic behind this is the same logic you've seen for years on that range chart in the morning in the live training room. Okay, the swing high was 79.21. That's about a 40-point move if I did the math in my head right. It's at $400 per contract traded. Only issue is it's very difficult to get out of the swing high or a swing low because you don't know it is such till after the fact. Market starts to walk sideways. That's a pretty good tip-off right there. This wick and the sideways walk, you're starting to feel this. Then the step line crosses. Because this was a long move, an up move, what we're looking for after the step line crosses is we're looking for the first red candle that closes below that step line. You say, well, what about this one? Well, on this one, the step line was still in the process of crossing. So the first one that closed below the step line after the cross is this one, and the closing price there was 79.12. So from 78.82 to 79.12. Alexa, 79.12 minus 78.82.
7,912 minus 7,082 is 830.
Okay, I think we've got to do that again. Here. I'll do it myself. What did I say? 79.21. I could do it in my head, but I don't. That's a young man's game. All right, it's 39 points. I don't know where you got that number from, Miss Alexa, but okay. Alexa, 39 times 20.
39 times 20 is 780.
Thank you. Okay.
Of course.
If you waited
Have
for
a good morning.
Hey, you too. If you waited for the exit signal, if you entered here, our methodology says that you would enter at 78.82. If you wait for the exit signal, then this move was worth $780 per contract. For the trader who's earned the right to trade 10 contracts, it's almost an $8,000 move, okay? Now, we already talked about the consolidation. The CFMA1 gets below the BBC. Now, here, you got price above and below and above and below. Market starts to get serious here as we pull away. Notice every one of these candles, with the exception of that one, okay? That's above, but you got your CFMA1, even though it's blue, it's still below the BBC. So we have to be very suspicious of that one. Then all these candles are touching, touching, touching. We start to get some separation. The CFMA1 is pulling away from the BBC. This candle doesn't touch. This candle doesn't touch. This candle doesn't touch, okay? Any of these, now we never got a pullback that physically touched the BBC after we pulled away. Sometimes you will, but if there's a lot of momentum in the market, you won't. So once you can see that price is now trying to get to the zone below, remember, when price is below the BBC, we anticipate lower prices. And as price drops, we expect this weekly trading zone below to be good support until it isn't. So far it has been. Okay. So let's say you entered on this candle here. No, you know what? Let's say you wanted to get below that low right there. Let's say you entered on this candle. The candle opened at 78.79 down to 78.62. That's 17 NQ points. That's $340 per contract traded in this one candle right here. You knew price was trying to get to the zone below. You could have entered here or here or here or here, but probably the most conservative of all entries would have been to let price take out this swing low, and then boom. Price is always trying to get to a weekly trading zone, either the one overhead or the one below. Once you learn to discern which zone it's currently trying to get to, all you have to do is pick your entry, set your stop, and let the market do the heavy lifting. Oh, thanks very much, Frederick. We've got 4 minutes to the Fed decision, except now we've only got 2 minutes because Frederick posted that 2 weeks ago. Don says you would need overnight margin. Which one are you talking about, Don? Which alert are you talking about? You only need overnight margin when you hold an order open from one session to the next. If you open an order on Globex, you pay the day session rate. So whatever your broker charges you during the day session, that's what you'll pay at night, unless you hold, let's say you hold an order from the Monday session over to the Tuesday session. You're in a trade when the market closes at 5 p.m. Eastern. You don't exit. You're still in that trade at 6 p.m. Eastern when the market reopens. That's when you get hit with that big margin. Otherwise, you don't have to worry about it. Okay, that's what you mean? Perfect. Okay, thanks, Don. Okay, we're down to seconds. So I'm going to pump up the volume here and let's just see what they say. 26 seconds. This is just some guy talking. I'm sure he's a very nice guy. I don't mean just some guy. His mother probably loves him a lot.
What we're seeing right now
10 seconds.
On October 15th, we'll get higher tariffs. On December 15th, even higher tariffs. We're gonna have you pause there. We're gonna get the decision here. Let's go to Washington.
Here we go.
Policeman standing by with the Fed decision. Steve.
Watch the S&P chart.
Lower by 1/4 point, the Federal Reserve lowering the Fed funds rate to a new range of 1 3/4 to 2%, down 25 basis points. The Fed said uncertainties about the outlook remain.
Only
the
got
Fed
a
will
quarter.
act as appropriate to sustain the expansion. The vote 7-3 with 3 dissents, but for different reasons. The same two hawks who dissented last time, they didn't want to cut at all, Rosengren and George, Boston and Kansas City, but one Doug, Jim Bullard, wanted to cut by 50 basis points. Those 3 dissents, the last time we had 3 dissents was back in 2016 when there was a vote of change and 3 hawks didn't want to do that. They wanted to hike. They're going on now. The projections show a very divided Federal Reserve. 7 FOMC members, a plurality in this case, forecast a 3rd cut this year. That is 1 more from where we are now. That would bring the rate down to 1.63%, or the average rate. But 5 members see no need for any cuts at all. They didn't even want the one today. So if everybody had a vote, and of course not all the FOMC members vote, there would have been 5 dissents from today, well, if they voted that way. And 5 more forecast just the 1 cut this year. put it all together, do all the math, the median is that this is it in terms of cuts. That's the median of the funds rate forecast for the Federal Reserve. That said, the plurality does see one more cut coming, which is 7. Does it include the chairman? We don't know. That's going to be important. Now, the Fed also lowered the interest on excess reserves at another administrative rate in order to attempt to get a hold of the Fed funds rate, which, as we've been reporting, has been trading outside of the funds rate target. Let me go through very quickly now the assessment of the economy. And if you remember what we reported last time the Fed had a statement, it's very much the same. And in fact, it's a pretty upbeat assessment. The labor market remains strong. Economic activity rising at a moderate rate. Job gains solid on average. Same stuff they said last time. Unemployment rate remained low. Household spending, they actually upgraded that to saying it's rising at a strong pace from having picked up from a year earlier. The only thing they added in terms of weakness was the idea that exports have weakened along with business fixed investment. Overall core inflation, though, running below 2%. Market-based measures, same as last time. Same assessment, really, of inflation running below 2%, but overall pretty solid economy. So quarter-point cut, adjustment to the administrative rates, and a divided Fed as to the outlook. Back to you guys.
Steve, would you say that because it's seven members see a third cut and 5 see no need for any more cuts, that it's really uncertain as to whether or not we get another one, and maybe that's why the markets are at session lows right now?
I think that's right. I think that you put a statement like this together, you know, I mean, where's the weakness that calls for more additional cuts? The only thing is that they have is that the outlook is uncertain. Well, guess what, Melissa? The outlook's always uncertain, okay? And the Fed will act as appropriate as the only hint you get that maybe another one's to come. The question is, who are those 7 people who want to cut that additional rate cut there? If it's the chairman, it matters significantly more than if it's not the chairman in that 7.
Steve, also, so the takeaway from that was that the median rate projection did not come down.
Well, I'm sorry. I don't know if it came.
I'm back.
Give me a second here. I'll find my paper.
Hopefully those folks there kept you entertained. And my phone just rang. Was that maybe John? No, I guess that wasn't. Let me see if he's in here. He might want to come back on. You there, John? Your mic's open if you want to come on. Okay. As happens with Fed announcements, we ran up, and then we ran down. And then we ran up. Now we're moving back to that zone. This is what I mean about gambling. Okay, when the Fed announcement came out, right here, whoop, we go way down, then we come back up. Now we're heading back down. So let's say you had placed an order just above the market right before the Fed announcement to go long. You had to be quick. And if you were going to put an order to be short, you'd have to go below that zone. So was there profit opportunity here and here? Yes. All of this has happened in 5 minutes. Okay. Would you be quick enough, astute enough to grab this before it vanished? Or would you have been quick enough to grab this before it vanished? Maybe you are, maybe you aren't. Okay. This is why we don't trade the Fed. Trust me, I tried. Sometimes I did okay, and sometimes I didn't do okay. And after enough times at bat, I realized that I don't want to swing my bat when the Fed is pitching. I just don't. I'm going to go up in the bleachers with my popcorn. I'm going to watch the action down on the field. And when the market settles down and goes back to its normal rhythm, leg retrace, leg retrace, leg retrace, leg retrace, deeper retracement, that's when I want to get back in. This right here has nothing for me. Okay, so we'll watch it continue to bounce around. But let's go back to that NQ chart where we can see, look what it did. It went right up to the BBC. Let me throw the BBC on here. We spiked the BBC, okay? Got below the zone, got back above. All right, now back to the NQ. So again, it was right here. Well, go back over here. We had a classic trade setup right here. That would have allowed us to participate in this move. And then our exit signal told us when to get out, okay? Then, although we didn't pull all the way back to the BBC, traders who've been trained by me know when they can enter anywhere in here, and as I pointed out, here, okay? And did we go to the zone? We did. Okay, we touched it. The swing low was 78.62. Now, I don't know what that's worth to you, but these numbers were created Sunday night. Our partners and passport holders had them in their inbox 6:15 a.m. Monday morning. Today's Wednesday. The fact that price came down and touched 78.62 to the tick and then bounced right up to the BBC on this Fed news, I hope that speaks to you. Okay? Over here, we knew market was trying to get to the zone overhead. It failed to get all the way to the zone, but that did not prevent you from participating in a profitable trade. Here, at this point, we knew price was now trying to get to the zone below. You could have participated in that, and this one we touched the zone to the tick. Okay. Now I'm going to say something you've never heard me say before. In fact, 2 years ago, I don't know that I could have said this in the exact manner that I'm going to say it. Our first alert service was Logic 247. That goes back, I'm going to off the top of my head, 6 years. Been doing the Concierge Trade Alerts. That was the forerunner to Logic, to the Logic 247 alerts. Logic is based on previous price behavior. Logic 247 is based on current price behavior. What I learned over the years with the CTA is what led me to being able to create Logic 247. Now, I've explained to you that when the Concierge and Logic both point to the same price or the same area, it's two different things pointing at the same thing that really deserves your attention, a second look, okay? If you're not a partner, if you're not a passport holder, but you have a basic understanding of markets, in other words, you've been at this for a while, you've blown up at least one account, maybe two, okay? So in other words, you have an understanding of how this whole thing, works, this thing we call the markets and trading. But you've not found consistent profitability. See, anybody can put on a profitable trade. Anybody can put on an unprofitable trade, obviously. But creating consistent behavior or consistent results, number one, requires consistent effort on your part. And most new traders do not give the market consistent effort. Every day we're trying something new. We're trying to find our place in the sun. We're trying to find what works for us. So we're forever changing our time frame, looking for the magic time frame. Every day we're putting up some new indicator we just bought, some new oscillator, because on the historic chart, oh my goodness, that thing looks awesome. You know, based upon the historic chart that you see on the sales page for that indicator or oscillator, within a couple of weeks, they'll be handing you the keys to the world because you are now the superpower, right? It just never turns out that way, does it? I can say that because Michael and I together, at one point, I think we owned every indicator and oscillator that had ever been created and put up for sale. Plus, we had all the ones that we coded ourselves, right? All right. So you know the downside. Let me give you the upside. If you're the person I just described, even if you only vaguely resemble that person, but there's some elements there that you go, oh, that's me, that's me. What I'm about to say, I couldn't have said 2 years ago. I felt it, but I couldn't say it. I didn't have the evidence to present. I couldn't have been as confident as I am today. If you become a partner or passport holder, I believe with all of my heart, 100%, mind, body, and soul, I can teach you how to put on and take off profitable trades in 1 week. Now, that will require that you drop every preconceived notion that you have about markets. You got to take all those other indicators and oscillators that led you to blowing up the last account. You got to take those off your chart. I don't want you distracted. I don't want there to be any clutter. I'm not knocking anybody's indicator or anybody's oscillator. But if I don't use it, I can't help you with it, okay? I'm quite sure all of those indicators and oscillators do exactly what they were created to do, but we don't use them. We got rid of them because we wanted to get close to the market. We wanted to learn to take our cue from the market itself, from this crazy little thing called price. Price is driven by buyers and sellers. Indicators don't turn the market. Oscillators don't turn the market. Weekly trading zones don't turn the market. What turns the market are buyers and sellers. When there's more buying in the order flow than there is selling, price goes up. When there's more selling than buying, price goes down. I don't have auto sum loaded here, but if I did, which I can, right there, auto sum bid ask. This is very deceiving because it tells me right now that there's 148 contracts on the bid and 66 on the ask, okay? But look how fast those numbers change. This number could be huge, and then this one becomes huge. And back and forth, so don't even think about that, all right? Now I'm going to say what I said again. If you're currently unable to achieve consistent profitability, if you become a passport holder or partner, and you're willing to lay down the stuff you've tried that doesn't work and focus on what I'm teaching you, okay? I believe I can, now I've got to have your undivided attention. This is the learning process, okay? If you give me your undivided attention for a week, that means you show up in the room and listen to Michael for 2 hours every day. You watch the radio show as I highlight and explain things. And you and I do a couple of one-on-one mentoring sessions during that week. I believe at the end of 5 days, you'll be able to go to a chart, and if you follow my simple instructions, you will be able to put on and take off profitable trades on a consistent basis. Yeah, I said it. It's being recorded. It'll be available for playback a couple hours after we finish the show today. I've never made that kind of a statement before. I always say, it takes as long as it takes, and that's still true. It does. It's absolutely true. It takes as long as it takes for you to become consistently profitable. But because of revelations that have come to me over the last couple years, and the style in which I now teach and train, I have no problem making that statement. Now, I do my part, but you have to do your part. Pay attention, show up, practice in sim, all of those things. And you got to push whatever else you've been thinking about using. You don't have to throw it away. You don't have to take it out in the yard and burn it. But you got to get it off your chart and out of your mind for this week, where I'm trying to impart to you the ability, with the information we give you, weekly zones, indicators, and a basic understanding of how markets work. There's no reason that after that first week you couldn't participate in this long trade and know exactly when to get out, or participate in this short trade and know exactly when to get out. That's without me coaching you through the trade. That's without you using a Concierge Trade Alert or a Logic 247 alert. You can do this. Now, the reason 90% of new traders fail is because they have no one to teach them. Can you fix the plumbing in your house? I know some guys can fix anything. I'm not that guy. I can't. I cannot fix my own plumbing. I cannot fly an airplane. I cannot do brain surgery. Why? Because nobody has taught me to do those things. I honestly don't have any interest in learning to do those things. The flying part, I've always wanted to be able to fly a plane, but because I've never tried to learn, and in order to learn, of course, I would need somebody to teach me. That just makes sense. If you're going to be a plumber, somebody's got to teach you. If you're going to fly planes, somebody's got to teach you. If you're going to do brain surgery, somebody's got to teach you. Why is it then, when we come into this arena, this industry, this business of trading, why is it that we look at a chart and go, oh, well, that's easy. I can do that. I assure you there's nothing easy about trading. But the way we teach our students today makes it. It's always been simple, but it's like really simple now, okay? Teaching every day has made me a better teacher. Whenever I'm teaching someone an idea, a concept, a principle, a rule, it opens my mind in a way that if I was just sitting here by myself, talking to myself, those revelations would not come. I've learned more while teaching than anywhere else, okay? So, if I'm speaking to you, if you're not consistently profitable and you want to learn how to become consistently profitable, let's go. I'm ready to teach you. Get a hold of Valerie, 949-42-EMINI, or send her an email, support@cfrn.net. Request a price sheet and a spec sheet. Yes, I'm going to charge you to impart this knowledge to you. It's also going to give you access to the weekly trading zones. It's also going to give you access to the Logic 247 alerts and the Concierge Trade Alerts. Everything that you've ever seen on this show as a passport holder, you have unfettered access to. Okay? Now, somebody's waiting for me to say, I guarantee you'll be a consistent profitable trader after 1 week. And we both know I can't do that. I can teach you how to play baseball, but I can't promise you that you're going to become a pitcher for the Yankees. I'm going to give you the information. I'm going to give you the tools. You're going to bring your attention, your self-discipline. You're going to do what I ask you to do and nothing else. You're going to ask lots of questions. Because when you have an unanswered question rattling around in your head, it leads to confusion, and confusion leads to bad trades. Okay? So I can't guarantee you're going to become a consistently profitable trader, but I believe that I can teach you how to be consistently profitable in these markets using our methodology in a week. I really do. Okay? Now, I'll stop there because that's a lot. I never thought I would say that out loud to people all over the world at the same time, yet I just did. Now, if you're currently passport holder or partner, and you're not consistently profitable, you should book a mentoring session so that I can ask you, what the heck have you been doing? And why the heck haven't you been doing what we teach you? Because if you do what we teach you, you see, everybody that entered here and exited here, per our methodology and indicators, you had a profitable experience. And if you got in anywhere through here with a trade 2 target down at the trade 2 target, the zone, you had a profitable experience. So if you did anything other than go long here or go short here, I want to know why. And then I'm going to say, no, that's okay, don't do that anymore. You've got to know what you're supposed to do when you're supposed to do it. Then, here's the really tough part. You've got to actually do what you know you're supposed to do when you know you're supposed to do it. Okay? All right. There we go. It's on the record. Now, let me look here in the chat box. Okay, Don, I wanted to speak back to your question about the overnight margins. The CME has the new micro contract, which I'm sure you're all familiar with, 1/10 the size of the regular E-mini. And just as an example, on the S&P, if you had held an order open, so you're in a trade, it's time for the market to close yesterday afternoon, Tuesday, and you decide to stay in that trade to the Wednesday session, you're going to get hit with that big margin Don was talking about. On the S&P, it's like $6,500. But if you're trading the micro contracts, instead of it being $6,500 margin, it's only $650 margin. Now, the micro contracts, CME created it for the S&P, Dow, Russell, NQ. Okay? All right, so we covered the S&P, the Dow, Crude. Oh, the only one we didn't look at was gold. And here's what gold has done. Oh, baby, what did the pound do? Well, bonds didn't move. They're pulling back. Probably going to pull back to the trigger at 160.10. I had a bond chart here. Oh, there it is. All right. Now, I updated the channel yesterday with this chart. We were sitting up right in here somewhere. I put the fibs on from the most recent swing low to the most recent swing high. And I pointed out that this 50% Fibonacci retracement pretty much lined up with our entry. Important prices, important areas are almost always tested. So for price to come back and test the entry, no surprise, we see it happen with practically every swing trade and with most concierge and logic. Price makes an initial run, comes back to test the entry. So we actually hit the 62% fib, and we bounce, come back to the 62, bounce again, and then right here, pulled back to that 50. Now the entry was 1.2500, and the swing low of this candle, swing low 1.2499. So that went one tick below the trigger, one tick, and now it's bouncing. Okay, leg, retracement, beginning of a leg, retracement, another leg. Now, some might say, well, whoa, you just put in a lower high. Does that concern you? It's going to do what it's going to do. Now, the point I was trying to get across yesterday when we were up here. See, when we were up here, the entry to the swing high right here, there was already $437.50 profit per contract traded. So for the 10 contract trader, this was a quick $4,000. Okay. Now, what does traditional technical analysis 101 tell you? And everybody said we should move our stop loss to break even, right? So here you were sitting with almost $500 per contract in profit. You move your stop to break even so you've got no risk on the trade. Now, we actually teach you this in the live training room, but you got to understand that these swing trades are different, okay? Not your father's swing trade, as I say. So you're happy, woohoo, I'm already flush, profitable on this thing. Let me get my stop to break even so I don't have any risk on the trade. I can go fishing while it works itself out. It's going to work itself out. Unfortunately, you're already stopped out. You must have a hard stop, and we published a hard stop for this alert. Okay? And you've not heard us say a word about moving it. Okay? I talked about not moving it. I talked to you about what Mark Douglas taught. My friend Mark said, you gotta learn to pay yourself as the market makes money available. This candle here was a pretty good indication that we were entering the pullback phase, okay? The retracement. Let me throw some indicators up there. Step line, left side of the blue climbing CFMA1, step line crosses, first red candle to close below the step line, closing price of that candle, 1.2544. Off the high, the exit signal cannot get you out at a swing high because it doesn't know it's the swing high till after the fact. Okay? So if you had exited this trade here and then price came back to give you a double bottom entry at the same price, follow me, right? So give that some thought. If you need help with it individually, book a mentoring session. If you're a logical swing trader partner, passport holder, regular partner, whatever, you need a mentoring session, you need me to explain this in more detail. Can't tell you anything I haven't already told you here, but maybe I can explain it in a different way that if somehow this didn't quite jive, make sense, hopefully I can help you with it. Okay? Okay. All right then. That leads us... Well, let me bring you up to speed on logic. I'm not going to go through each one, but I'm just going to show you the results for the week so far. We're in week 59. 35 alerts issued so far as of 11:30 a.m. this morning. 9 never triggered. 3, we're still waiting on a trigger. 1 is working itself out. So we've had 22 actionable alerts so far. 18 of them found a price target. 4 of them have been stopped out. So 18% of actionable alerts stopped out this week. 2 weeks ago, we had 0 stop out. Last week, we had 10%. And I've said again and again, those were not normal weeks, okay? Those were unusual weeks. What we've averaged over the past 58 weeks is 20% of alerts being stopped out, okay? All right. Now we can go to the good word for the day. We've been talking about stress, how to deal with it, how to handle it. Hold for me just 1 second. I'm not going away, but I just got to take care of something. So my phone stops dinging. Okay. Matthew 11:28 says, I will give you rest. If the load you're carrying is too heavy to bear, Jesus didn't give it to you. Others may have. You may have taken it upon yourself, but Jesus had no part in it. Matthew 11:28 through 30 says, if you are tired from carrying heavy burdens, come to me and I will give you rest. Take the yoke I give you, put it on your shoulders, and learn from me. I am gentle and humble, and you will find rest. This yoke is easy to bear, and this burden is light. The final stress management principle that Jesus taught us is give your stress to Him. You'll never enjoy complete peace of mind until you develop a relationship with the Prince of Peace. Now, note that Jesus didn't say, come to me and I'll give you more guilt, more burdens, more stress, and more worries. Even though that's what a lot of religious people seem to teach. Some churches create pressure instead of relieving it. But Jesus turned this on its head and basically said, I'll give you rest. I am your stress reliever. When you get in harmony with me, I'll give you inner strength. Only Jesus can transform your lifestyle from stressful to satisfied. The greatest source of stress comes from trying to live our lives apart from the God who created us. Or just trying to go our own way and be our own God. You know, there's schools of thought out there that teach we're all little gods. Not me. I'm not God, and I'm glad. What do you need? What do you need? If you've never had a heart change, if you've never committed your mind, body, soul, and checkbook to Jesus, you need a transformation. You need a heart change. You need to be able to see the world through His eyes, through the eyes of a believer. I promise you, if you, and this I guarantee, if you give Him your life with all of its stresses and just say, Lord, you got to mean business here. And He knows when you're fooling yourself and trying to fool Him, which you can't do. When you come before Him with a broken and contrite spirit and say, Lord, please give me a new life. Please replace the pressure I feel with the peace you offer. Help me to follow you. Help me to follow your principles of stress management. He will respond. I guarantee it. Will you receive it? I can't guarantee that. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.